Hello and welcome everyone. I'm Tom Bowley, Chief Market Strategist at earningsbeats.com, and this is Trading Places Live. It's Monday, June 6th, 2022, and I'm pre-recording this Trading Places Live for Tuesday, June 7th. Currently, we're showing futures down a bit. Still got a long ways to go overnight, of course. But right now, Dow Jones futures down 140 points, S&P 500 futures down 20, NASDAQ futures down 84. One thing I had mentioned over at earningsbeats.com on Monday during my Trading Places Live show was that, this week, I feel like we're in this trading range, and I'm just not sure which way the market's going to open each day. I mean, we could see the Dow up 300-400 points at the open. We could see it down 300 or 400. And honestly, I just don't know which way it's going to go. I think there's going to be a lot of back and forth. So that makes things a little bit more difficult to call. And from a trading perspective, makes it difficult to hold overnight. Going through the agenda for today, I'm going to start off with the daily market recap, then talking technically. I'm going to bring up an old segment, what's hot, what's not. That was something I used to do on Market Watchers Live. We used to do the noon show, or I used to do the noon show with Aaron Swinlin. We used to do a what's hot, what's not. So I thought maybe I'd go through and just point out a few stocks on the what's hot side, a few on the what's not side. Then we'll get into earnings spotlight and wrap the show up with the three you must see. I want to take you over, before we get into all the action, I do want to take you over to earningsbeats.com. This is our home. If you go to earningsbeats.com, scroll down, you will see an area where you can sign up for the Earnings Beats Digest. This is our free newsletter that's published 3 times a week, Mondays, Wednesdays, and Fridays. All it takes is a name, email address, hit that subscribe button. We'd love to have you. I think you'll enjoy it. It's mostly educational, but I'm sure for some of you, you may find some trades among some of the stocks that I talk about. That's completely up to you. But we're just focused mostly on the things that are important to us, things like earnings, gaps, relative strength, candlesticks, trend lines, all of those types of things. So I think you'll enjoy it. Again, just go over to earningsbeats.com, scroll down, and you will see that area to sign up. All right, let's jump into the daily market recap. I'm going to start off here with the Dow Jones Industrial Average, which finished up 16 points. It was down at the end of the day, but then really in the last few minutes, we got a little surge. So we did move up and finish in positive territory. The S&P 500 also finished positive, up 13 points. NASDAQ up 49. Mid caps up 15, small caps up 8. On a percentage basis, mid caps and small caps both up around 0.6%. They were your relative winners on Monday. All of the major indices are above the 20-day EMA, so we are still trading above the 20-day, which is good. Most of our sectors are doing the same thing. You can see discretionary stocks holding about $1.80 above the 20-day EMA. This is a group that finished up 1% on Monday, so that was your leading sector. Materials up nearly 1%. Communication services up 0.5%. Utilities up about 0.4%. And then real estate was the primary laggard, down about 0.3%. So not a whole lot of variance between the winners and the losers on Monday. Again, the sideways action, if you look at the major indices after this big move up, we're just kind of putting in this flag. Now, breakout out of the flag to the upside and through the 50-day moving average would be very bullish. While, when we look at the S&P 500 in a few minutes, you'll see that we have like an island cluster. If you're familiar with candlesticks, after the uptrend, we had a gap up, and we've just been going sideways now for several days in this cluster. And so what we don't want is a gap down to leave the island cluster all by itself. That is a reversing type of a formation. And so if we gap back down below that 20-day and below this cluster of candlesticks, that would be an indication that perhaps the next down leg is beginning. So you want to watch for that to the downside. like I said, to the upside, getting through the 50-day moving averages across all of our major indices, probably going to be a little bit of a chore, along with the most recent highs. So if you look at, say, the S&P 500, you can see these reaction highs up here at 4,300 double top. So even if we get through and break out of this flag to the upside, we've got the 50-day, then we've got a double top in price. We got a trend line that we've got to watch for. There's still a lot of overhead resistance that the market's got to try to navigate. And I would think the path of least resistance is probably to the downside. We'll see. Moving on to the 10-year Treasury yield, big day for the yield. We moved up over 8 basis points on Monday, finished at 3.04%. That was the first time in a month that we have closed over 3%. So it looks like we're making a move back up here, maybe to challenge gap resistance, which is at 308. And then the high, which is up near 317, 316 and change. That's going to be a key area. And then just want to point out, over the last 11 years, we have yet to close above 3.25, 3.25%. So watch the interest rates, because if we do get a break above 3.25, that could be something that spooks the stock market, and that could certainly be the catalyst to take the S&P 500 down below that 3,800 level. So we want to watch 3.25 pretty closely on the 10-year Treasury yield. One other thing I would be watching is the, well, let's see if I can get it typed in there properly, price of crude oil. The price of crude oil has been trending up again. We went above $120 a barrel, got up to $121 a barrel on Monday before settling back at 118.50. But we have now easily broken above this double top here at about 115. So the combination of higher crude oil prices, I mean, we could see crude go back up here and test this 130 level. The combination of that, along with higher interest rates, we really need to watch both of those as we go forward. All right. Let's take a look at the S&P 500 here. This is the long-term chart. This is going back almost 100 years. So it's a monthly chart. I don't know that I can give you a much big picture than this right here. S&P 500 continuing to trend higher over long periods of time. If you look back, the big lows that were connected, 1942, 1974, and 2009. Now, if we were to get into a secular bear market, that potentially could take us all the way back down to about 1600. I don't see that, but I'm just throwing it out there for those of you who might be a little bit more bearish than I am. I believe we're probably going to hold up around the 3,500 level if we go down one more time. The other thing I wanted to point out on this chart is up here in the blue shaded area. This is a monthly chart. And I just want you to look at the monthly PPOs. When we have gone through these secular bear markets, here are the big secular bear markets. When you see that monthly PPO go negative, that is essentially when these prior secular bear markets have started. 1980s and 1990s, we had weak periods. We had the 1987 crash, the 1990 cyclical bear market. That was the Persian Gulf War, spiking oil prices, higher interest rates, many of the same things we have today, a recession. But we never saw the monthly PPO go negative. We stayed positive the whole time. When we finally went negative, that was the start of the next secular bear market. Now we're positive. Look where the monthly PPO is right now. We're still well above zero. So we would have to see much more weakness before this would begin to morph into what I would consider to be a secular bear market. So I've been asked, why do you think this is still a secular bull market? Well, I mean, the history is that we go through these periods for about 20 years. We have these grand cycles, super cycles, where the market overall stays in an uptrend for an extended period of time, like 2 decades. And this was 2 decades after we broke this double top. This was 2 decades after we broke really just this one top, but kind of a little bit more sideways action. And then here we had a double top, and we just broke this in 2013. 20 years would take us to 2033. This is 2022. That would mean we'd have 11 more years in this secular bull market. So I just think it's a grand super cycle, and that equities will remain in favor, even though we'll have pullbacks from time to time. I said the same thing during the 2018 trade war. We had a cyclical bear market. Said the same thing during the pandemic. Went down 35% in a month. In the middle of that, I said we were in a secular bull market. Everyone thought I was crazy. Well, here we come back down again. I believe we're in a secular bull market. We'll see. Time will tell. Maybe I'm wrong. I believe we go higher, though. I think we're going to come out of this scorching to the upside later this year. Let's take a look at the weekly chart on the S&P 500. So here, you can see we've been going up for a while. This was the trade war, 2018, fourth quarter. There's the pandemic. Both times rallied right back to new highs. Look at this rally. Went down in 3 months, and about 3 months later, we were at this high. Went down in 1 month. 2 months later, we were at a high. We're going down 5-6 months. I believe 5-6 months later, we could be back up near the high, if not at a high. That's what I believe now. I think the question here in the near term is, do we go down one more time? And I don't have a definitive answer for you on that one. I think it's a toss-up. I would probably wait. I probably would put the odds on maybe going down one more time a little bit higher than the bottom being in. So I think maybe we're going to roll back over one more time, maybe get down to 3,500, and then we'll kind of see what happens from there. My guess is that we will bottom. On this weekly chart, though, I think it's noteworthy that we are trading below the 20-week, 20 weeks below the 50. Both the 50 and the 20 are now pointing lower. That 50-week moving average has rolled over. I think that's significant. So we've got to correct this pattern of price action, which is below the 20, which is below the 50. You know, in a bull market, you've got the opposite. You got price action above the 20, which is above the 50. So we can't correct this. We can't begin to repair this technical damage until we get through that 20-week EMA, which is currently at 42.65. There's also key price resistance up near 4,300. So I think that is kind of like the upside. If we can somehow manage to keep moving higher, I think that's where we probably will fail and start to roll back over, if not sooner. We got a big inflation report coming out on Friday. The CPI will be out on Friday. We got the Fed coming up later this month. As I mentioned, interest rates seem to be rising again. Crude oil prices breaking it back out, rising again. These are some of the things that have been driving the market lower. So we got to recognize that we've got all of this kind of coming together, possibly, you know, to a head later this week and over the course of the next week or two. So got to keep an eye on this. Anyway, there's your downside. Now, I want to just go through these sectors real quick and just show you. Here's the technology area, the XLK. You can see that same configuration. Price below the 20, which is below the 50. Consumer discretionary, price below the 20, which is below the 50. Communication services, starting to sound like a broken record here. Industrials, not by a lot, but we've got the same thing, same configuration. And financials, all 5 aggressive sectors are lined up just like the S&P 500. Something's got to give. We either need to break back out above these 20-week moving averages, or we go lower. It's as simple as that. Consumer discretionary, defensive group, still trending higher. Healthcare, I'm looking at it, still trending higher. Real estate, This one's starting to roll over a little bit. That PPO went negative. We're now below the 20, which is below the 50. This one's starting to look like maybe it's rolling over. Utility still strong. Materials, sideways consolidation mostly, and energy very strong. Here's your top performing sector. But the 5 aggressive groups all look like the S&P 500, which is why the S&P 500 looks like that, by the way. Those 5 aggressive groups have tremendous influence on the S&P 500, and all 5 of them have that configuration. Price action below the 20-week EMA, which is below the 50-week SMA. All right, let's move on to what's hot and what's not. So I thought we'd start with what's hot. This is a stock that I mentioned to members a few days ago. I really liked what was happening here. You can see the volume come in on Bumble. This was with earnings. So this is on one of our key chart lists, our earnings AD, which is earnings accumulation distribution. The reason, or the way you get onto that particular chart list, is by trading solidly higher from the open to the close the day after earnings come out. And you can see Bumble did that on good volume. And it's continued moving higher. And notice when it pulled back the last time, it tested the 20-day moving average and it held and it went to new highs. This is acting like a trending stock to the upside. That AD line looks to be trending higher. So all in all, I think we're looking pretty bullish here with Bumble. As far as the relative strength goes, it is now at about a 6 or 7 month relative high versus software. So it's showing relative strength. It's showing absolute strength. It's showing an improving AD line. I love the fact that it's bouncing off the 20-day and setting new highs. It looks like it wants to go higher here. Another what's hot stock, Phototronics. And this is in the semiconductor group. Not a lot of semiconductors doing well, but with earnings, look at this move up here. Last couple of weeks, very, very strong volume, breaking out over prior highs, the AD line moving up, relative strength off the charts versus semiconductors. I would say that Phototronics is rather hot. So that's part of the what's hot crew. And then the last one, this is actually one of our portfolio stocks for this quarter, Brigham Minerals. So this is in the mining area. You can see mining has actually been going down, but Brigham Minerals has been going up. Look at the volume coming in, strong volume, and look at the relative strength. Very, very strong action. So if you want to outperform the benchmark, it helps to do it with leaders, stocks that are outperforming their peers. And Brigham Minerals, definitely one of those. So these were 3 hot stocks I thought I would mention. How about 3 not so hot? Well, speaking of mining, how about, this is gold miner, Goldfields. I mean, looked really good starting, the year, broke out in mid-February through probably the middle part of March. Very strong action. Went from 10 to 17. That's a 70% move in about 6 or 7 weeks. And guess what? It's given all of it back and then some. Now trading back down below $10. Look at the volume come in on this huge red candle. Don't like to see that. Tried to rally for 2 days, and now we're right back down near those lows. Definitely not a very hot stock here. Next up, AAL. So let's move on to the airlines, American Airlines Group. Right there, that big that big black candle, filled candle on heavy volume, off of an uptrend. That can be a reversing candle, and it certainly was. That marked the top on American Airlines. It's just been drifting sideways here over the last 3-4 weeks or so. But we were talking about $21.50 stock back in the middle part of April. Recently, it went down to 15. Currently, it's just trading in a trading range between 15 and 18. Not a very good looking stock here. And one other I'll mention on the downside, what's not, Myriad Genetics. I mean, we've been downtrending here now for a while. This is in the biotech area. You can see biotechs just recently went to a new low in early May. And this stock is actually setting new 52-week lows relative to a group that's already poor. Biotechs here over the last 2 or 3 weeks have started moving back down, and they're not far from 52-week low, relative low, versus the S&P 500. And Myriad is actually one of the weaker stocks in this space, setting a new 52-week relative low versus biotech. So not looking good. Volumes picked up on some of these big red candles, setting new lows. Just not a very hot stock here. So this one is in the what's not category. All right, moving on. Let's take a look at earnings spotlight. So we had a couple of companies come out after the close and report earnings. So let's go over those. The first one is Coupa Software. And I'll give you the numbers here in just a minute if I can find them. All right. So Coupa Software came out after the bell and reported 8-cent profit versus the 5-cent profit that was expected. Now you can see Coupa has been downtrending. This was a $280 stock back before growth stocks started getting hit. And it went all the way down to 60 from 280. Some of these stocks have been beaten up really, really badly. Most of them on the growth side. But at some point, I think rates are going to top. I think inflation tops. And when that happens, I think you're going to start seeing money rotate back in here. So there's a lot of hollow candles right in here over the past 3 weeks. So we went down, had a big gap down. I don't know if this was an exhaustive gap right here, but you can see off of that 6 straight hollow candles. And now here we are back down here at this level again. I actually like the stock. They did beat, and in after hours trading, I think it was relatively flat. Yeah, up 0.5%. So even though they beat, market, not overly impressed, looking just to kind of go sideways here. But I think anything back down near that 60 level, if it does roll back over, that seems to be where all the buyers are coming in right here, maybe around 65, here around 60. So anything back down in the low to mid 60s would seem like pretty good area to consider on the stock, especially if you like to try and catch bottoms. I normally don't. I'm more of a momentum trader, so I like to see stocks that are already trending higher. And I would like to play that uptrend, trade the uptrend, rather than try and catch the bottom. If you can catch the bottom, that's great. You can make a lot of money. But it's not always easy to do that. Just make sure you keep your stops in play. One other report that came out after the bell was HQY Health Equity. So this is also in the software area. Now this one had that big gap down all the way back in December. So this looked like an exhaustion gap to me right here, trending down, trending down. The key to an exhaustion gap, normally the volume's off the charts heavy. And a lot of times you will see a red hollow candle. In other words, you gap down with horrible news, and then you basically keep going up from there. So that sets a bottom. Here we got as low as, I don't know, maybe 36, went back up to 45, moved back into the 30s, and then had a steady uptrend. Now, Health Equity, after the close, I believe, had a pretty nice reaction. Yeah, 5.7% back to $66. So on the chart, looks like it's continuing its move to the upside here. And the fact that we're now trending above the 20-day. Look at that AD line. Very strong AD line. And Health Equity missed on its earnings. So it was expected to come in at 28 cents. It came in at 27. And yet the market still rewarded it in after hours with the stock up more than 6%. Interesting. Let's see. How about we move on and wrap this thing up with the 3 you must see. I'm going to start off with Okta. Now, I like to watch stocks that come out, beat earnings expectations, gap higher, and then come back down to key support. I'm going to shorten this chart just so that we can take a little closer look. I'm just going to look at the last 3 months. Now you can see here with Okta, I'm going to pull up the inspector. We had closed prior to earnings at 93.68. We opened after earnings at 107.02. So we gapped up 13 and change. Got as high as 111.35 at the high, right up here. And in 2 days, remember, gap support now sits down at 93.68. The 20-day EMA sits at 93.48. Today's low was 94.17. So we got really close. I would watch maybe for some kind of a, maybe if we open relatively flat and go down intraday and then come back up and hold on to gap support, that could set a bottom. Now, if it can't hold on to gap support, then I would be looking for another test of these recent lows. So if we can hold here, I'm good. If we don't, I would exit quickly because I don't want to hold it all the way from $95 or $94 all the way down into the 70s. And this is a fast mover. It's volatile. It could happen in a couple of days. So you just want to make sure you keep your stops tight. And if you're, risk averse, this is probably not the kind of stock you want to trade. It's a very volatile stock. You can make a lot of money in it very quickly, but you can also lose a lot of money in it very quickly. So just be careful. All right, so that was one stock that I wanted to show you in the 3 you must see. The second one I want to show you, probably have seen this one before, Apple. So the problem I have with Apple is if I annotate this and show you where that prior low was right there, and then we bounced, then we came down, we went through, tried to get back up to 150, couldn't, went to a new low. Here we come, kind of false breakout there. And then the last 2 days, we've been right back below the 20-day. We need to get back up through this 151, 152 area on Apple. If we don't do that, this is the largest holding in the S&P 500. It's the largest holding in the NASDAQ 100. So if Apple can't get going and it goes back down, there's a good chance that it drags the rest of the market with it. So watch Apple closely. The last one I'll show you here is Dropbox. So DBX, I'll also do a shorter term chart here. But DBX, look at that volume come in and this move up. It had been tracking above that 20-day moving average and then had this huge heavy volume move to the upside. Now, we were down on Monday, and I wouldn't be surprised to see a little bit more weakness, but I think anything back down around 21.25, 21.5 would get very interesting for Dropbox. So those are the 3 I had for you for the 3 you must see. That is it for today's show. I appreciate you tuning in. I'll be back on Wednesday over at earningsbeats.com. If you go to earningsbeats.com, all you have to do is click on that Trading Places Live right here on our website. Click on that anytime after 8:45 in the morning. You should be able to come right into the room and check it out. Anyhow, that's it for me. I appreciate everybody tuning in. Have a great day, and I'll be back over at Earnings Beats on Wednesday. Happy trading, everybody.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.